Welcome back to the show, everybody. Today we're going to talk about the path forward for XRP. Some are saying that XRP is going to explode past $20, possibly by the end of the year even. And we're going to take a look at that as well as what it takes for a path forward for XRP to have that kind of success and so much more. Somebody roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackUpBradleyAbove and everything that we're talking about here. It is October 10th, 2021 right now. $2.312 trillion market cap for crypto. It's coming back, baby. Bitcoin sitting at $54,900 right now, up 14.41% on the 7-day. Ethereum at $3,500 plus right now. It is up 3.84%. Shout out to my son who just got a jag of Ethereum. I know he's happy and I'm happy for him. Cardano is at $2.24 right now. It's pulling back and taking a breath, but we know Charles is doing great work there. XRP is $1.18. It was $1.20 just moments ago when I was putting this video together here, and I had actually $1.20. We were up 7.8% on the 24-hour and 13.48% on the 7-day. Right now we're 12.4 on the 7-day. Let's look at the price range. More importantly here, we touched $1.22 on the top end at 122.71, and on the low end we've seen it go to $1.10, 110.87. We will keep an eye on it as we move through it. Now listen, I want to go through some information right now, and some of it may feel like a wet blanket or putting ice water in your veins, but stay with me here. You know, a lot of what we want to talk about today is look, price is moving, and I'm excited about that, and it's moving in the right direction. But I also want to talk about something that really could be bittersweet, because XRP's ultimate goal is to serve as a bridge currency to all the money and all things that have been digitized and tokenized and represented on the ledger, right? Or any other ledger, and be able to settle those things. One of the things I believe is a firm catalyst to that is the idea that we could see the conventional stock market have a huge correction to the downside. Shout out to Cryptopolis, who's a dear friend of mine. We used to do a show together, if you're new to this channel, a year or more ago. And I guess we did it for about a year and a half, and I enjoyed it on Friday mornings. But he shared this information as a reminder to everyone, and none of what we talk about here on the channel is financial advice from me or anyone else, but this is looking back at history and understanding that October 19th of 1987, we saw a huge decline of 31% in the stock market in one day, and that was really a massive crash back then. But Black Monday, I think it was, wasn't it? Something like that. But at any rate, it's a reminder that we are in similar times. That's right. The Black Monday stock market crash saw U.S. markets fall more than 20% in a single day, not the 30, but ultimately it was a 31% drop, right? It is thought that the cause of the crash was precipitated by computer program-driven trading models that followed a portfolio insurance strategy as well as investor panic. Precursors of the crash also lay in a series of monetary and foreign trade agreements that depreciated the U.S. dollar in order to adjust trade deficits and then attempted to stabilize the dollar as its new lower value. So understanding that if you've been in this space for any time, we also know that the dollar index, known as the dollar Dixie, is a huge inverse correlation. If the dollar is down, crypto is up. If the dollar is up, crypto is down, right? That has been proven out for quite some time now with many of the technical analysts out here. So understanding that we may be in a similar situation as 1987 in the conventional markets, with all the money printing, with all the stock markets being completely overbought. We have seen massive CEOs selling off some of their own stocks even, right? Which could lay proof to that in the near term as well, right? But we will watch, and the warning sign here is that we could be headed for another crash that looks very similar. We've had other economists tell us about huge corrections coming that could be in the 30 to 40% or more in the stock market. So head on a swivel out here. It could be very bittersweet moment for something like XRP to serve as a bridge currency for all the money and all things of the world, because it may take a catastrophic economic event like that to introduce an asset like XRP to even the ones that have been naysayers all this time. We'll see. However, this is a clip here from Quant Standard, who responded to a clip I put out on Twitter this morning. I want to play this clip to set this up, and thank you to Quant Standard here for this clip. But listen to Gary Gensler in this practice war game scenario and what he sets out in this practice war game scenario here and his thoughts at the time. This was a few years ago. Listen to this.
We have been leapfrogged by others, by digital currency, by digital Chinese currency. Why? Because, frankly, our central bank has been slow. And there's an appointment coming in January of 22. The president's got to decide whether to change over who's leading the Federal Reserve.
And you know what? And to that point, we are 3 months away from that happening, right? And we have a new administration in power now, as opposed to when it was then. So keep listening.
Federal Reserve runs our payment system. Right. And I think we need to move that Federal Reserve into the modern era.
And talking about the modern era, Quant Standard shares this article here about the Federal Reserve of Board of Governors of the Federal Reserve System, talking about making the announcement that they were going to bring up to speed the payment system itself. Let's keep listening here.
Thank you very much. It's difficult to disagree with that finding of the BIS that climate change is actually a threat to financial stability. And what's more, is that it's a threat and a risk that is hardly measured and taken into account by many actors. I believe that the action taken by suggested by the BIS, the action recommended by other central banks, I can think of Mark Carney from the Bank of England, for instance, are completely justified. And I was personally very pleased to see that the private sector is actually also taking action in that respect, and certainly would welcome the involvement of other operators, including the accounting firms and those that are setting the international accounting standards, as well as the large asset managers, as we've seen. I think we badly lack harmonized measurement systems that can be generally accepted and that are actually implemented.
And we know for a fact that we have seen the Federal Reserve and Jerome Powell even in the last couple weeks talk about being heavily invested in a new settlement system. Now that was different than the article that was being shown in that video clip. But now I want to take you to this clip that I had put together this morning that I've been sharing here. And I have to ask the question, because we know Ripple is in a case with the SEC. We know when Gary Gensler's asked about that case or why he believes that the majority of the market out here in crypto land is digital securities in his mind, he gives two reasons when he speaks. He talks about the Howey test, which we have proven XRP does not fall into the Howey test at all. Ripple could go away today, tomorrow, and I don't want them to, but they could, and XRP would still flourish and exist because there's many different use cases and all of these things, right? It has its own breathing life. It's its own living thing, that market for that asset. Just like oil is its own asset and Exxon could go away tomorrow, right? Okay, so looking here, I showed this video and I covered this the other week, but I'm doing a much more condensed version of this because I'm not going away with this until somebody can explain to me, why does Gary Gensler always use this as his shield for why he believes the majority of crypto falls into securities designation? Take a listen.
I think there's a lot of clarity, this Howey test and these other tests, Reeves test. There's a Howey test. There's other broad brushes with regard to this as well, as to when something is a note, called the Reeves test that Thurgood Marshall wrote a few decades ago. It's called the Howey test. There's other broad brushes with regard to this as well, as to when something is a note, called the Reeves test.
One of the definitions of a note is a debt security obligation repayment of a loan, a predetermined interest rate within a defined time frame. Notes are similar to bonds, but typically have an earlier maturity date than other debt securities, such as bonds. Notes can be used as currency. Although the term note is specifically included in the statutory definition of security, case law has determined that not every note is a security. The Exchange Act and the SEC specifically exclude notes with a term less than 9 months. This here is a set of lists that have been judicially predetermined that are not securities. They fall outside the classification of a security. And I know that they're hard to see, so let me just very quickly bring this together here so I can bring you to that actual list much clearer right here. And it basically says a note delivered in consumer financing, a note secured by a mortgage on a home, a short-term note secured by a lien on a small business or some of its assets, a note evidencing character loan to a bank customer, a short-term note secured by an assignment of accounts receivable, a note which simply formalizes an open account debt incurred in the ordinary course of business, particularly particularly if, as in the case of the customer of a broker, it is collateralized, and a note evidencing loans by commercial banks for current operations. In determining whether a note bears a resemblance to one of these enumerated exceptions to a security or whether a new exception should be added, the court considers. So if you look at this, you could also ask yourself, if these things make it not a security, right? If it qualifies. I'm always reminded of the line of credit program that Ripple started last year, which could really fall into a note which simply formalizes an open account debt incurred in the ordinary course of business, or maybe it falls under a short-term note secured by a lien on a small business or some of its assets, right? So if that's the case, then XRP is not a security, but it could still be a note, right? It's very interesting where this could go. The question really remains is this, and let me play the rest of this clip here for you. To a security or whether a new exception should be added. The question is has Ripple been making moves with a line of credit program to qualify under one of these enumerated titles or points to not technically be a security? And if so, what does that mean for the retail investor if we can't hit one of these family resemblances that give us a non-security designation? Could we see them split the baby and Ripple get a non-security designation as a note in a settlement, but then retail holders get held to a security standard of XRP being a note and be forced to go through a dealer broker? That is the question. The other real question is, the only reason we're having this conversation is simply this. Why is Gary Gensler using the Reeves test as his shield as he does the Howey test to say that he believes the majority of the crypto space is digital asset securities? You know, digital asset investor has said it many times, and I'm going to echo it right here. Words mean things. And Gary Gensler doesn't say a lot, but when he does, we have to start looking into things. And I was reminded from Jeremy Hogan in his video when he said that his father told him good lawyers or great lawyers don't make assumptions. Well, I'm not a lawyer, don't pretend to be, but I know one thing, that's applicable to any one of us, to not make assumptions. That's really a great rule of thumb. And here, I've heard him say that at least 2 or 3 different times. You heard 2 different times here in 2 different occasions. I know at least 3. Why is he using that Reeves test? He believes that it is relevant. He believes that it applies to something, if not just XRP, certainly the space more broadly. Okay, so then there's this clip here I wanted to play you, which is Brad Garlinghouse talking to Charles Gasparino. Now, I know I covered some of this stuff the other day, but I want you to hear this minute 13 exchange here.
Ripple is an extremely transparent company, particularly relative to the crypto industry. If you start treating XRP as a security, however, that means you're subject to a whole lot of regulations, costs associated with a security settlement.
So right there is reason enough to understand that it is not in their favor to have a security designation. We don't want to see that. I don't want to see that. That is for sure. I believe XRP is a virtual currency, just like FinCEN said, right? But we have to, I believe, responsibly entertain these ideas and speculation based on what Gary Gensler keeps shoving in our face as his defense.
If you're using, again, the magic of what is XRP is how incredibly fast and how incredibly cost efficient it is for these cross-border payments, how Ripple deploys the technology. If you start treating it as a security, the costs and speed change dramatically.
Okay. So understanding that may be why we see Gary Gensler going for a note designation, but it could still be a non-security designation based on the understanding that Ripple is not consumer facing. And what do we know about a note? I gave you the definition here, right? What do we know about a note? And the note is simply a debt obligation, right? Being repaid right here. A debt security obligation, which doesn't have to technically qualify as a security. Notes can be used as money. And what would that debt security obligation be? Well, it's a bridge currency. So it's whatever's being transferred, right? It could also represent collateralization of the ledger by central banks around the world, because what do we understand about them? That they're actually using a private ledger to launch central bank digital currencies. And what do we know about digital currencies or private stable coins? There's a huge push to make sure that those reserves are held to a standard, and that standard looks like it may be they need to be in a federally chartered bank with FDIC insurance to guarantee that they fall under the banking regulations of the OCC, and then they can be monitored for the one-to-one or surplus, so there's never a fractionalized issue with any kind of representation of these assets. That standard could be held to something that is considered to be a note as well. I'm not a lawyer, but I certainly can see a path here. Let's listen to the rest of this clip from Brad.
And really, that's an example where the SEC is in effect picking the winners and losers of this new industry.
Exactly.
And that's not the role of the government in this case.
Yeah,
that's right.
Are you ever going to settle with them? Because I know people like you, I've covered this a million times. Yeah, we're going to get them. We're going to win. And then all of a sudden, let's say, let's just settle. You know, is that going to happen with you guys?
Look, I think that to the extent we can find a constructive path forward with the SEC, we of course want to find that. There's no scenario, though, that we're going to settle unless there's absolute certainty about what is XRP on a go-forward basis. And it's very clear in how Ripple is using these technologies, how many, many scores of other people in the XRP community are using these technologies. They're not securities. They don't represent an ownership in Ripple, the company.
Okay.
There we go. But if they're going to be reliable to the tune of central banks settling trillions of dollars every single day, they may have to be a note, even if they're not a security. I don't know where this ends, but I tell you one thing. There's a lot of excitement about what's going on with the price right now. And we'd like to say, as we do for so many others, we appreciate all you do and share with us, Dark Defender. And he says here, today you must take your coffee with you since it may take time. Examine below the technical analysis, see how the targets we set in February 21 has exactly, done and still in line with where we're going. Some people might eat their fingernails while XRP will be sailing through $20. Enjoy your Sunday. This is what he's shown us here, and it lines up with what he has shared on a chart in early 2021 this year in February. And it's remarkable to me how this channel has still held true, and CoinsKit as well. I mean, these guys show you the up and the downside. What is the resistance? What is the support? And let everything roll within that. And then everybody else can make their own decisions based on what's happening daily in the market. I tell you, this is getting very exciting. And if we see a path forward, hopefully we see the SEC not drop the case without some kind of clarity for XRP, because I think that would be the most damning thing for all of us, Ripple, XRP included, as well as retail investors. But hopefully we see some kind of resolution that allows it to go forward, but not only go forward, but go forward with the kind of clarity that massive institutions and central banks absolutely have the green light to begin using this asset, because we may be faced with a catastrophic economic event on top of what we already know was a deliberate shutdown of the economy due to a pandemic. That's going to do it for me. Enjoy your Sunday. Hope I didn't bring anybody down here, but I hope I did bring some food for thought, and hopefully we'll be able to broaden this conversation as we go forward. That's what I'm trying to do here with you today. Remember to check out all the links in the description and the comment box. I'm excited to see your comments on this and hear what you have to say as well. I'll catch all of you on the next one.